Today, President Biden signing the massive $1.2 trillion infrastructure bill. Where will the money go? And co-working space WeWork releases its first quarterly report since going public. Things are looking a lot better for the company since the last time it tried. But is it a comeback story? And the new stock exchange just opens in Beijing, China. How does it relate to Beijing's recent crackdowns on business? That and much more coming up on NTD Business. Good evening. Great to have you with us. I'm Paul Graney. A big day for President Biden today as he signed the $1.2 trillion infrastructure bill into law. Biden says the bill is a once-in-a-generation investment in America's infrastructure and competitiveness. Lawmakers from both parties joined Biden at the White House lawn, including the two lead negotiators of the bill. That's Senators Rob Portman of Ohio and Kyrsten Sinema of Arizona. The group also included governors, mayors, labor unions, and business leaders. The bill includes $550 billion of new funding to pay for transportation projects, the utility grid, and broadband. The White House has appointed Mitch Landrieu, the former New Orleans mayor, to manage implementation of the spending. But Lance Roberts at RIA Advisors today warning the spending bill could be highly inflationary. And shipping rates from China to the U.S. have fallen dramatically just over the past week, according to the Freight-Ost Baltic Index. Rates from China to the West Coast were down 21%. Rates from China to the East Coast down 16%. But prices are still more than 3 times higher than they were at the start of the year. Supply chain expert Saul Mercogliano saying inflation is leading to less discretionary spending in America. That means fewer orders. There's also been a production slowdown in China, meaning fewer goods ready to be shipped. But Mercogliano also says he doesn't expect shipping rates to be back to pre-pandemic levels at all. And even if prices do come down, it won't fix congestion at U.S. ports, which are hamstrung by a lack of workers and overwhelming volumes of imports. Those operational holdups mean many carriers are going right back to Asia as soon as they offload their containers in America. They don't wait to fill up with American exports. Seems it's not worth the hassle. But that's hurting American farmers. They aren't able to get their produce overseas in time. NTD's Olin Richards has the details.
The congestion at U.S. ports is putting farm exports in trouble. Farmers can hardly get their cargo abroad in time before food supplies go bad.
The supply chain challenges have frankly been an absolute nightmare for our industry throughout this year.
Right now, it's much more expensive to ship from Asia than from the United States. Shipping consultancy firm Drury says it costs 7 times more to ship from Shanghai to Los Angeles than the other way around. So shipping companies don't want to waste time waiting for a less profitable load from the U.S. West Coast.
As a result, shipping companies are refusing to load U.S. agricultural exports, and over 70% of the containers are returning to Asia empty. And
it brings about a huge loss.
In just the first 7 months of this year, we estimated that's cost our industry about $1 billion.
In a letter to President Biden, the Agriculture Transportation Coalition said the cost to ship a container has increased between 300 and 500% in the past 2 years. And a survey suggests that American farmers have lost 22% of their foreign agriculture sales due to the transportation problems. Experts think this export crisis may result in irreparable harm, especially for the U.S. dairy industry. It takes a huge effort to build customers in foreign markets.
And once those customers are secured, they tend to be reluctant to switch. But once you lose them to other suppliers, whether that's from New Zealand or Europe or elsewhere, well, it's really hard work to win them back.
Agricultural exporters are rearranging their shipments to other ports farther away or using air transport even if they cost more. Arlene Richards, NTD News.
And there are production challenges in the food industry too, all of which could mean more expensive food for Americans. Soaring meat prices helping Tyson Foods overcome the strain of reported labor shortages. The company reporting a double-digit jump in sales and earnings in the fiscal fourth quarter includes a record in its beef segment despite a 20% surge in cattle prices. Tyson says higher prices are needed to counteract increased costs for labor, transportation, and other items. Top Biden aides blame Tyson and other meat companies of collusion for rising food prices, but Tyson just goes and blames the shortage of labor. And one industry association tells us the chip shortage is also making it hard to get farm equipment. That same chip shortage is now forcing automakers to reduce the features available to customers. GM announcing some of its models won't have heated seats. NTD's Evelyn Lee has more.
General Motors is the latest car manufacturer to remove a feature from some of its cars. For GM, it will be the heated seats. That's amid the chip shortage. New cars reportedly can need up to 1,000 chips, so many brands are trying to conserve their chip supply for more critical components.
They're trying to get as many vehicles as they can out in the marketplace, and if they can hold back a few features on some vehicles, they can get even more vehicles out to be available for sale.
Charles Chesbrough is the Senior Director of Industry Insights at Cox Automotive. He says the good news is that car brands may give out discounts for models where certain capabilities aren't available. BMW, for instance, said goodbye to touchscreens for some of its models. And now customers who buy one without a touchscreen will get a $500 credit. Along with scrapping some heated seats, GM is also delaying the hands-free driving feature for its 2022 Cadillac Escalades. And Tesla recently delivered cars without USB ports. Mitsubishi is limiting blind spot monitoring, and Peugeot replaced some digital gauges with analog speedometers.
Is that the best situation for those consumers that can is to order their vehicle and be patient. Wait for that vehicle to get built and then delivered to them.
Chesbrough says this way you can make sure you get all the features you want. And the waiting time differs. For some manufacturers, it may just be a matter of weeks, but for others, you may be waiting for months. Evelyn Lee, NTD News.
With prices going up across the board, many are turning to gold, traditionally considered an inflation hedge. Gold prices up again today, hovering near 5-month highs, around $1,860 per ounce. The latest rally started after data last week showed consumer price inflation running at a 30-year high. Credit Suisse analysts say gold has set a sturdy 5-month base and can rally higher. It predicts it could eventually see an attempt to shatter its record price of $2,075 an ounce. Surging consumer prices have also fueled interest in the 30-year Treasury inflation-protected securities, or TIPS. Just days ago, investors piling into the 30-year TIPS sent yields to a record low of minus 57.57%. And today, Wall Street indexes closed nearly unchanged. The Dow fell 13 points, S&P 500 was unchanged, and the Nasdaq dropped 7 points today. And co-working space WeWork has filed its first quarterly report since going public. With a strong CEO and more realistic valuation, the company seems far more solid than it did 2 years ago. NTD's Olin Richards has the details.
WeWork gave its first report Monday since going public. The company posted revenues of around $660 million, 18% less than the $810 million it made in the same quarter last year. It had a loss of $4.54 per share, which is better than its loss of $5.51 1 year ago.
The valuation is down at the rock bottom now. All the fluff has been taken out, all the hype has been taken out. When it was $47 billion, which was very unreasonable, it was really 25 billion that was more reasonable. They have a very small percentage of the real estate market in terms of ownership, but their leasing rates are like 20% in New York City, 30% in other states. So they are leasing a lot more than before, even though they own much less real estate.
Santosh Rao is the head of research at Manhattan Venture Partners. Rao says that WeWork's business model is risky, but at the moment, things are incrementally improving for them after their botched IPO 2 years ago.
And then now they have regrouped. They have a very good CEO, very experienced CEO. They're coming from the bottom up. But I think the bigger issue is, are we back? Is this hybrid work environment permanent, or is that transitory? Are we going back to the old ways of working where we had the regular office place and then people went back and then you didn't need that? So right now the jury is still out.
Sean Pappas is a partner at Star Associates, a boutique real estate law firm. He sees office sales rising.
The pandemic, to me, especially in New York City, being kind of on its way, on its last leg here, has moved people back into the office and has gotten the office market a little bit busier. And I think that we're going to see that continuing on moving forward.
WeWork CEO Sandeep Mithrani told CNBC he believes WeWork will hit profitability in 2022. Arlene Richards, NTD News.
But while WeWork is hoping more people will return to the office, other investors are betting on the shift to remote work and demand for data centers. An investment firm is taking data center operator CyrusOne private in an $11 billion deal, as together with fund manager Global Infrastructure Partners. As the number of people working from home has grown, the demand for data centers that provide cloud-based services has also grown. Infrastructure and real estate funds have scooped up data center assets to capitalize on the surge. And the buyout values the Dallas-based company at about $15 billion, including debt. CyrusOne has more than 50 data centers globally. A new stock exchange just opened in Beijing, China. In contrast to China's other exchanges in Shanghai and Shenzhen, the Beijing marketplace will list small and medium-sized companies instead of large ones. The regime has been targeting large companies like Alibaba parent company Ant Group and Uber alternative Didi. Many say the CCP is afraid these companies and their leaders are becoming too influential. 81 small and medium-sized businesses are now trading on the Beijing exchange. Reuters reporting they're mainly from sectors like software, pharmaceutical, and high-end manufacturing. And at the close of business today, the market had a value of $45 billion. But compare that to the Shanghai exchange's $7.8 trillion or the New York Stock Exchange's $26 trillion. So joining us to discuss China's new stock market is Milton Ezrati, formerly the chief economist at Lord Abbott, now the chief economist with Vested. Milton, thanks so much for coming on.
It's a pleasure to be here.
Milton, we have the news of China's new stock market in Beijing, obviously. I think the piece that really stuck out to me was small companies. It's for SMEs, which is interesting. I think recently we've seen the Chinese regime come down pretty hard on big companies. You think there's some relationship here?
I think there is. I think China, at base, China realizes it needs to improve its financial system in general to support companies. I think the big companies was something of a political challenge. And that's why they're coming down on them. And also, things like Evergrande threaten the financial system because of the debt they ran up. And the government wants to erase that, although it seems to be putting a lot of money behind, or at least a sort of a plan behind resolving the Evergrande and related situation. This thing, I think, is an attempt to foster smaller companies, that is to help the economy without depending on foreign money. And if you depend on foreign money, of course, you have to abide by foreign rules, things like disclosure and transparency, which the Chinese government does not like.
What do you think? I know at the moment this is only if you're a pre-approved investor, you're able to actually invest in this new stock market. Do you feel in the future this is something foreigners will be able to invest in? Do you feel they'll want to invest in a stock market like this?
If the prices are good, if it shows good performance, yes, foreigners will want to get in. It'll depend on what kind of restrictions the Chinese government places on them. The ultimate thing for any investor when they go into any kind of market or investment is the ability to get out when the time comes. And if the Chinese government makes that cumbersome, there will be a reluctance to invest in this market. But I think that the essence, and it sort of guides me in interpreting everything the government in Beijing does, is control. They want
and part of that is, like you alluded to, it's capital controls, right? When we have foreign investors investing in China, do they just think that the benefits outweigh the risks of these types of capital controls?
Well, they have done that in the past, and they've had foreign investors come in. And of course, one of the main complaints the United States has is the kind of restrictions the Chinese government places on how much control foreigners have with the money they invest there and what they have to share with Chinese partners. So they've tried to get the best of both worlds, having the financial expertise, having the money come in to support new business, which every economy needs, but try to retain control. In this case, I think it's interesting that at the same time the Chinese are restricting access to this particular market, they've invited in BlackRock to build mutual funds in China. Now, they would be Chinese registered funds, so all the disclosures would be determined by the Chinese government, but that could attract foreign money without any of the discomfort the government feels in having the transparency that was, for instance, imposed on China when they were raising money in New York until effectively the Chinese government stopped that.
Interesting. Milton Israti, Vested, appreciate it. Thank you.
Pleasure. Thank you.
And a big day for cryptocurrency in India. The government says crypto can't be stopped, but it can be regulated. NTD's Phil Zhou has the story.
The Indian government's first ever panel discussion on the future of cryptocurrency took place Monday. Conclusion: crypto cannot be stopped, but must be regulated. The Standing Committee on Finance met with industry leaders, such as representatives from crypto exchanges and the Blockchain and Crypto Assets Council. The main concern is if it's safe for investors. Another concern is the barrage of advertisements and promotion of crypto. Over the weekend, the Indian government said irresponsible advertisements that promise wild profits which can mislead young people must be stopped. One finance CEO noticed countless crypto ads during the men's cricket championship match T20 World Cup, with 40% in his survey saying the ads were ugly. Another person tweeting, "The idea of making crypto look easy and safe is scary, especially if you don't understand it." But many in India's crypto community are happy crypto is finally getting regulated and that India could become a top crypto player, with hashtag #IndiaWantsCrypto trending on Twitter at one point. India has over 100 million crypto holders according to Broker Chooser, which is higher than any other country. One member of parliament said a new bill set to regulate cryptocurrencies may be introduced during the winter session of parliament starting later this month. Phil Zhou, NTD News.
And still to come this evening, Apple rolling out its first Korean language series this month. It's on the heels of Netflix's hit series Squid Game. And a Russian Stargazer shows us his observatory that he built on the top of his house. What neat things can it do? That and much more coming up on NTD Business.
Hello, I'm Mike Lindell. Cancel culture has not only affected myself and my pillow, but millions of you out there. Before all this started, I had already written in my memoir, I dedicate this book to anyone that's looking for hope. Well, right now, we're all looking for hope. I believe that my story is going to bring inspiration and hope to everyone. By the time you're done reading my book, you will believe that with God, all things are possible. To thank you all for your support, I'm offering some of my best price prices ever on MyPillow products, including this exclusive bundle. You get my book and these 5 MyPillows. They all have beautiful scenes and verses from the Bible, such as Isaiah 41:10. Do not fear, for I am with you. This 6-pack bundle is regularly $219. Now it's just $99.98 and free shipping with your promo code. Go to mypillow.com and use the promo code on your screen or call the 1-800 number below. Thank you and God bless.
90% of news outlets in the United States are controlled by 6 corporations. They're not out to tell you the truth of what's happening. They're out to tell you the picture of the world that they represent. The mission of the Epoch Times is to chase the truth, to ground all statements in facts, and prevent people from being misled. This is a battle between truth and deceit. Subscribe today and join the Americans who are seeking truth and tradition. We'd love to have you on board.
Welcome back. Move over pecan pie, a new dessert wants a place at your Thanksgiving table. Reese's has released its largest peanut butter cup ever in the form of a full-size Thanksgiving pie. It's already sold out. The 9-inch peanut butter and chocolate dessert weighs in at a hefty 3.4 pounds. Only 3,000 peanut butter pies were available for purchase on the Hershey's website at about $45 plus tax. Now they're already sold out, according to the website. And hot on the heels of Netflix's breakout South Korean hit Squid Game, Apple has rolled out its first Korean-language original series this month. Coincides with the launch of Apple TV Plus streaming service in South Korea. Jason Albano reports.
Apple debuted its first Korean original TV series this month, hot on the heels of Netflix's breakout hit, Squid Game, coinciding with the launch of Apple TV Plus in South Korea. Based on a Korean webcomic, Dr. Brain tells the story of a neurologist who tries to find clues to a family accident through brain experiments. The 6-episode sci-fi show stars Lee Sun-kyun, who fans of the Oscar-winning Korean film Parasite may recognize.
The series is a very deep science fiction mystery thriller, but at the same time it is a drama about how a man who lacked feelings began receiving others' emotions due to side effects of brain scanning.
Rival streaming service Netflix struck gold with Squid Game. It became the service's biggest original series launch. Apple's foray into Korean content comes after Squid Game helped catapult South Korean culture to new levels of global success. Dr. Brain's director, Kim Jae-woon, wants his series to prove his country has more to offer.
I hope Dr. Brain can be an opportunity to show there are diverse works in South Korea that have multiple colors and cover a wide variety of nuances, sensibilities, and materials.
So far, Apple TV Plus lags behind Netflix in South Korea, which has been offering licensed and original Korean content for several years.
And luxury brand Gucci is teaming up with Microsoft to celebrate the 20th anniversary of Xbox. Together, they are releasing a special edition Xbox Series X. The bundle will come with a console, 2 wireless controllers, and a fashionable carry case. Gucci laser etched the console with its iconic rhombi design. The company says the pattern alludes to both the initials of its founder's name and the shorthand for good game. The case is designed to be on the go with dedicated space for both controllers and the Xbox. Gucci plans to sell 100 units through its flagship stores. You can get yours starting November 17th. It'll only set you back a mere $10,000. That price does include an Ultimate Xbox Game Pass. And a Russian stargazer has built his very own observatory on the top of his house. It's complete with a terrace and a telescope. NTD's Andrew Thomas has the details.
The rooftop of this house has a feature rarely seen on property listings, an observatory. The owner, who's an engineer and stargazer, built it himself, and he also built the telescope inside.
When there are interesting objects, I show them. People come to see. Now is the time for Jupiter, Moon, Saturn. Everything can be seen from here, and it is quite interesting for everybody. Those who see it for the first time, they just admire Saturn and Jupiter, but especially the Moon impresses them all. Its craters, it all looks great.
The 12-foot wide dome is made from waterproof plywood used as formwork for the concrete. Sheathed with galvanized iron and glued with aluminum tape. It rotates using rollers from an old pair of roller skates. The plastic body of the telescope is a recycled sewer pipe. The owner says it all cost less than $330.
Everything is self-made here. It's possible, of course, to buy all these things, but first, it is expensive, and second, it brings you double pleasure when you do it yourself. Not just the fact that you have made it yourself, but that it is no worse than factory-made.
A specially designed mount allows the telescope to move to precise points in the sky. The device is connected to a computer, which can remotely control the observatory, and take pictures of the stars, which he shares with a group of amateur astronomers in the region. Andrew Thomas, NTD News.
That's the latest business updates for today, but you can still catch NTD Evening News with Stephanie Cox. That's at 6:30 p.m. Eastern. For NTD Business, it's all for today. Thank you for watching. We'll see you tomorrow.
Thanks for watching us on YouTube. Did you know YouTube only keeps selective videos on its platform? So if you want to make sure you get the full picture, just subscribe to our newsletter. Go to newsletter.ntd.com and sign up. It's free.